Hello everyone. Today I will be reacting to this video from the Backholder pod called Should You Buy Gold Now? So I haven't watched this video before. I don't know what are they going to talk about. I'll just showcase my live reaction as someone with that can beat the market with stocks. So let's read the comment first. Just go for physical bullion only. Don't know. Started buying gold and silver since 2011. Probably lost to the S&P 500 by a lot. Is there a need to brush down gold because you don't believe in gold? Oh, whoops! This comment is a spoiler. My 2 cents were most of us wouldn't worry if we put in 100k in stocks or gold, but I'm not sure if majority of us dare to put in 100k in crypto for 10 to 20 years. True. Crypto is not regulated, so like let's say people run away with your money, with your password, or like somehow you get cheated to give them your crypto wallet password. You cannot get back your money. It's just gone forever. Guys, you should skip this topic for now because you need to do more research first. Otherwise, the discussion may come across as too shallow.
Like I said, or like I shared,
Whoa.
gold is hitting 4,350 as of the time of this recording. So this is the year-to-date chart of gold. I haven't really showed you how much it has performed, but I think to just compare with one of
Wait, year to date, right? And then it's like this exponential kind of growth. But at the same time, it's like gold is used as a typically used as a hedge against like market crash. And then we have a weird movement whereby the like if I were to search the S&P 500 now, like yeah, you have this weird movement whereby like S&P is going up, and then you have the gold going up, so everything is going up together. I was just my initial thought is just this is ever since the COVID stimulus, the government print too much money, everyone has too much money to invest, so every investment asset is going up together. Yeah, typically gold is used as a hedge against like stock market crash, so it should be inversely proportionate. But as you can see, logic don't really work in reality here because weird things happen.
I think people tend to look at the benchmark like the SPX, which tracks the S&P 500. So if I make a comparison with the SPX, how about 20 years now? We move back to 2005. So 2005 here's 2005, 2006. The goal, the thing tracking goal is still outperforming S&P 500. So over the last
Oh,
5, 10, 15, 20 years, I
that's crazy. I mean, like, yeah, there is a outperformance, and then like you see the gap here probably at end 2024. Oh, this was when Donald Trump announced tariffs, right? So, oh, crazy spike. Okay, Go is not really my area of competence, I will just say. So I'm just reacting based on what is shown in this video. Go is not really my area of competence. Disclaimer.
think gold has outperformed on most time framing. I think at least based on the last 20, 25-year time
I can't do
horizon,
this anymore, man. I need
gold as an
1.5
asset
times
class
speed. I
has
need
clearly
1.5.
significantly, maybe I won't use significantly, but it has clearly outperformed the 500 largest, most innovative companies in the US. So I think for a start, maybe just to
Oh,
share your
that's
own
interesting.
biases and your own exposure, maybe we go one round around the table. Eric, do you have any exposure to gold? And
But something is weird though. Like if you look at the goal, like since like goal returns since I don't know inception or something, 10%. Yeah, like eh, yeah, like 6.35 seems about right. I mean, like the chart that is being shown in the video is just like how to say. By right, you should see based on the earliest data that you can get. So I would much rather trust these. Okay. Yeah, so let's say it's 9.6. Since 1926, you get, sorry, 9.8. Okay, yeah, you can see that S&P should be better than gold.
we segue into the idea of gold as an asset class. It has outperformed your 500 most innovative companies in the US for not doing anything, just being shiny and sitting down there for the last
For
20 years.
the past
How
20
like that?
years.
Should I still
Yeah.
buy more gold now? Or is this really just starting? Maybe Kelvin will get you to open the floor first.
Now you can compare with S&P. No one cares about S&P. That one is a shit coin. Let's compare it with Baba. Wow, Baba. Baba has outperformed gold in 6 months. Wow, year to date.
Like I mean, like in this case, you're taking like individual stock to like measure against the commodity. That's kind of like taking one outlier to prove the to prove the population size wrong. You know, you can't just take one outlier to measure against results for fun. S&P is a pretty good like aggregate because it's the average performance of the largest 500 companies. Meanwhile, here is just um using the movements of one stock, which is an outlier to to prove his point. Okay.
Can look at Baba. Just kidding. And right now, it's definitely going hyperbolic already. It's not even like 45 degrees, it's like 12 o'clock kind of angle already. So, short term wise, I don't feel good about gold short term wise.
Yeah, the
Long term
spike
wise,
is really
this is
crazy
definitely a
for
very
some
strong
reason.
bull run. And I think this can continue to run for all I know. And the reason is because central banks are buying gold quite heavily. This was since 2023. And it's only now that retail has finally been going crazy about gold. Like I've seen quite a lot of images about people queuing up to buy gold in Singapore, in Australia, in China, these kind of places. And when the public is going forward and all these kind of things, we are probably near the short term peak for now. If you are trying to FOMO into gold right now, I would say be a little careful. But long term wise, I still think gold has the backing of the Bank of Reserves. So this is not a usual kind of gold rally. It is backed by a lot of geopolitics. But the Bank of Reserve are buying gold also. Yeah.
So
I see.
my turn to share. But if we want to revisit to ask like is gold a good investment or not, I think we need to to ask like is gold really an investment? Because like what Chicken mentioned, right? This is just like a rock sitting there doing nothing, right? So it's like there's no productivity at all. Whereas the companies that we invest in, right, they are producing either goods or services, right? So it's very different. To me, gold is more like just it is money. It is the true money. All the rest, right, the so-called fiat monies, right, they are not backed by anything, right? It's just backed by the government. So to me, gold is real money, but in terms of the long-term returns, I don't think gold should match or will be able to match the returns of, let's say, like stock market, given that
But-
stock market is like they have this productivity. One more point before you
Correct.
continue. You
I think
right?
so. I think so
If you
too.
look at all this
Correct.
chart that you just show, right? Let's say SPX, right? Actually, SPX chart just shows the price index. They don't show the dividends. So if you include the dividends into the charts, right? I believe S&P 500 they should outperform gold for some of the period where you say okay they are like matching the performance. Just remember that for those chart is just price return. But for gold, if you buy a gold, you don't get dividends.
I feel like the 10% return a year for S&P is already inclusive of the dividends though. But maybe I'm wrong because I don't buy the index, so I don't like know much about index at all. But I feel like it's already inclusive of the dividends in the 10% return, but we'll see.
From the gold, right? So it's just totally price movement. So I think that distinction is important. Okay, over to you, Chicken.
I think
Well, actually, I agree with Bunty that in the long run, like stock market will be better than the gold, just because when you buy an investment, uh, the returns come from two segments. First is the total returns. Sorry, not total returns. First is the asset price appreciation. Your asset itself got more valuable, and let's say your asset itself is not more valuable, and then like the next question is just is it generating money on its own? That means today my farm is worth like $100. I grow crops on the farm, and then every year I can sell the crops for $10. Next year I can use the farmland again to sell the crops for $10. Every year is generating $10 on its own. Okay, so for stocks, yes, there is the business value, and also the business itself is going to bring in you more money every year. But gold is just, yes, the thing has the asset itself has a price. Maybe the price will appreciate, but it can't grow crops. You can't it can't generate you anything for you to sell. Meanwhile, a business like a farm can generate crops for you to sell every year. So yeah, gold is just lacking that part. That's why total return wise, I think it will be lesser, because it can't reinvest into itself to like, it can't generate money. It can't use that extra cash which can be used to reinvest in itself to grow even larger. So that's why you'll lose out to asset classes like stocks that can generate money to reinvest into itself.
cherry pick my data to say that like what Kelvin did at the start of his thing, comparing on a very short time frame. And like Bunti also said, because it's a non-productive asset, I think regardless whether it's productive or unproductive, I think 25-year time horizon is a relatively high time frame. How many of us got how many 25 years to outperform or underperform in that sense? Like let's say even if you start investing at 30, 25 years later, you're 55 already. So that's why I think it's a very, very interesting case study in a sense where, yes, it is true that I have quote unquote cherry picked the data because I only show you until the year 2000 or 2005,
True.
which is where gold is outperforming SPX. If I continue
True.
scrolling the button, you will see SPX actually coming back. But that is like in the 80s or 90s. So, but then again,
True.
like I shared, in that very peculiar sense on this new gold trend, I'm not too sure how long it will last. But is there really no role that you can add gold into your portfolio today? I just wanted to hear Eric's thoughts.
No.
Actually, I think when I was looking at gold, right, I asked myself, like, if I really want to hedge, should I buy gold? And then I think I looked at Bitcoin and I decided that I would rather get Bitcoin. And I think it was up till now, I think it's the correct decision because I was looking at the two charts. I think Bitcoin far outperformed gold's performance, but Bitcoin has only been around for like what 13, 12 or 13 years around there. Like it's not very long, so you cannot pull back 25 years. There's no such data, but it is. I think if I'm not wrong, I think it's much more volatile than gold. Yeah, so that's the downside I feel for Bitcoin. Of course, it's also non-productive non-productive asset.
So you
I mean, I just want to add that when he is right that if you buy Bitcoin, it's generating more returns than gold. But we also need to think on a realistic manner. How much money can you put into Bitcoin, which is an unregulated asset? Let's say like I have $10 million. Can I all in my 10 million into Bitcoin? Even if I can predict the future, how Bitcoin is going to grow like 10x from this point. Can I really put my 10 million all in into the Bitcoin, even though like, let's say I can foresee the future and it actually happens? I don't think I'll be that confident into like putting my money into Bitcoin, because what if my 10 million become like 100 million? Then the stock exchange or somehow like people can run away with my money. It just goes back to the problem whereby if my um money goes too big, because crypto is really like black market kind of area. It's all the gangs that is like trading it, and also all the exchange crypto exchanges are like not regulated in Singapore. So I would say like it's really a place whereby you won't feel safe putting large amount of cash in it, because uh, you know people can run away with your money and you cannot do anything to get back your money at all. The police can't help you. So um, yes, it does have high returns, but it may not be good if you cannot put in large amount of cash into it. Meanwhile, compared to gold, you can safely put in like I many millions compared to crypto. Just my personal thought.
maybe if I can share based on some, I've forgotten where I read it before. I think the peculiarity or why gold is popular is because of its hedging purposes, in a very, very crude
Yeah.
sense, because of its uncorrelated characteristics
Yeah.
to whether it's
Yeah.
to stocks, to bonds, to whatever. And of
It's because I see Bitcoin not as a investment but more as a insurance, because for Bitcoin is outside of the financial system, similar to gold lah. So
Yeah,
So
don't call
it-
it insurance lah. Just call it lottery lah.
lottery. Actually, isn't insurance also lottery? So if one day the
Lottery.
USD doesn't do well, that's where hopefully Bitcoin will step in. But it did help all the other all the other countries that had super high inflation. It did help them preserve their wealth. So the idea is that if one day USD have that kind of high inflation, that's where Bitcoin could do well. Yeah, that's the hope lah. Hope. We wouldn't even call it an investment. It's a hope lah. Yeah.
So I mean, like, for Bitcoin to be used as a like actual digital currency, it needs to be recognized by businesses. It needs to be recognized by the government. I think more likely government will introduce their own digital currency instead. And like for a currency to be usable, you need it to be stable. Right now, Bitcoin is just so speculative and volatility is so high that it has already lost its purpose being like a digital currency, because you can't use the currency at all. And no businesses will accept the currency thinking like, hey, today one Bitcoin, you buy 1.5 cars from my shop. Oh, tomorrow Bitcoin, oh, I can only you can only buy one car from me for one Bitcoin. Is crazy, stupid. The volatility is too high for businesses to use cryptocurrency to set prices for their product. The currency itself needs to be stable and reliable.
Actually, I'm just curious, Kelvin. So you think that like for the past 10, 13 years, Bitcoin hasn't done well enough?
This is too short term already. Like 10 years, what is 10 years in investing is nothing. Even I take out I don't know, just now I show you like Baba And Baba can do well compared to. I can also pull Baba versus Bitcoin.
No,
Baba
I'm not
outperform.
talking.
I mean, I would just disagree with this part. I personally think once investments hit over 5.5 years is considered long term. 10 years is not like short. 10 years is actually considered long term already. Yeah, so I personally think why Bitcoin has done well, even though Warren Buffett calls it like uh no, sorry, not Warren Buffett. Charlie Munger calls it like rat poison and trash. Why Bitcoin has done well is because it has been used for like money laundering, and like all the illegal gangs use it to legalize their cash flow, and no one can trace it, which makes it like and no one can trace like where their source of money is from after they launder it using crypto.
About the
Right.
time frame. I'm talking about you saying that it can do well. Then I'm quite curious. What does do well mean to you? Is it just a time frame or is it just a return?
I think
So with more like gangs using crypto and buying more Bitcoin, and then that's why the Bitcoin prices are being pushed up. I feel like there is the underlying forces, but once again, I don't do crypto at all. I don't know shit about it. Not within my area of competence. I don't touch it. I don't want to. I know enough to know that it's not within my area of competence, so I don't want to know more about it. I just focus on what is my competence, and then which is to buy and sell stocks, and that's what I do. And I ignore everything else.
Yeah, so my question still is so you are saying that you need to have a reason, you need to have a thesis for Bitcoin, then you will say that, oh, okay, Bitcoin has done well because there's a thesis.
That's true. Also, like for if there is like a thesis or there is like a research, you kind of need to be able to understand it as well. You know, the content is there, you need to be able to understand it. If you don't understand it, it's just not within your area of competence. And if it's not within your area of competence, regardless of how well that asset class has done, like even if it's gonna do well in the future, you should not buy because you don't understand. Only buy what you understand. Like, so what if you miss out on huge returns? So what if you miss out on huge returns? It doesn't matter. If you just buy what you understand, you will get good returns already. You know, you don't have to get rich in the fastest way possible. Just get rich in your own way. And for sure, investing within your own area of competence is the surefire way to be rich. Invest in what you know. It will be slower than the fastest return, of course, that you can get from like let's say crypto. It'll be slower, but it's already a lot better if you just buy what you know. Proof is my own CAGR, which is the how much was it again? 34%. Yeah, in my first video.
Is that like your fundamental reason?
yeah, like, he has to prove himself lah before
Okay.
I see anything.
Okay.
My GPT ting. I have a bit of numbers, but I'm asking him some questions. That's why I need to follow up. But I give you what I have now first. Then maybe later I can close at the end. Right now, based on they did a proxy to understand the correlation between BTC and the total returns of the S&P. On a daily range, the matrix has plus positive 0.2. On a weekly is 0.25. And on a monthly is 0.1 correlation. This is based on stats from 2014 until now. I'm not too sure why I didn't manage to pull up since 2009, but let's work with what we have here. So you look at the range, it's probably on a daily, weekly.
I don't know this part, so I'll just skip this part. I don't know what is he talking about. Not within my area of competence. Sorry.
So how come gold has this very interesting characteristics of move up, then can sideways for 20, 30 years, then move up again, then it's in a sense catching up, then flat, then catch up again, then flat. And this kind of periods is very, very long.
I want to say like from his description, I mean it looks a bit weird. That 20-year chart that we see at the start of the video doesn't look like spiking up and then like being stagnant. But um let's say like gold is this phenomenon, which sounds about right actually also, that you spike up and then you just go straight. The thing with the prices is that I don't think you can predict when you will spike up. You know, you'll just randomly spike up on a random day. So if just nice by luck you hold it, um, then you get the gains. If you don't hold it, you don't get the gains. That's all. Um, because you cannot predict the market movements. Stock market is unpredictable. Like, you see, everything that's logical just becomes illogical. Why is gold moving together with the S&P 500 going upwards together? It's not logical. Theoretically, it doesn't work, but reality, it's like this for some reason, which we cannot explain. So I would say, uh, the good saying here is time in the market is better than timing the market. So just zoom out from the very start, see which asset class gives you the most returns. In this case, it's S&P 500 with the like 9.8% per year. And yeah, the longer you stay in the market, the higher the possibility of you getting the 9.8% every year. It's like year one, let's say the market crash, you don't get 9.8%. By the time you reach year 10 or year 15, for sure, average out, you'll be getting somewhere close to 9.8%, even though your first year is like trash, you know. So don't try to predict the movements. The movement is unpredictable. Just hold as long as you can.
Oh, I do have a story though. I think I've seen, quite interestingly, laymen that honestly don't know or don't like investing at all, constantly now talking about gold. I don't know how you're going to use the indicator, but it's up to you. Like for people around me that suddenly tell me, hey, gold is a good investment. They just, yeah.
Well, some concluding thoughts from me is just if there are some parts of the video that is being taken out is because I don't know about that part, that's why I cut it out. I got no comments about that part, that's why I cut it out. I just try to preserve the original video as much as possible and try to keep their original meaning as much as possible to the best of my ability.